This is part two of both my Ways and Means Health Committee and my comments to the um, the um, the Finance Committee um, hearing by Senator Warner on the day before. So, without further ado, the universal coverage, starting with the public option under the Affordable Care Act, with the eventual evolution to single payer seems like our best bet. A public option will only pass if pre-existing reforms are abolished, with the public option enrollment automatically upon rejection. That means, that if for the public option both to evolve and to be passed, health insurers should be able to drop coverage, but then they should automatically go to the public option as they would in Medicare. These comments, by the way, are similar to an attachment which I will link to. There's a video for it as well. It'll be in the comments section, but this is more in tune with current conditions as well. Public option, of course, must be subsidized, replacing Medicare for the disabled and those not requiring long-term nursing care. Long-term care, however, should be removed from the states and replaced with a new federal Medicare Part E. So if somebody's confined to a hospital because of their disability, then the federal government should pick it up, not the states. That will also help change pass. Now, the profit motive, with the need to constantly increase profits to attract Wall Street investment or keep stock prices growing, will lead to an ever-increasing number of people who will be considered uninsurable. Thus, they'll have to rely on the public option, and of course, the more that goes, the more it becomes single-payer. Most healthcare systems will be providing services anyway to comprehensive insurance beneficiaries, the retired, the disabled, and those in the public option, like I got with Kaiser. If you pick a health plan, you want to keep your doctor in the same health system, provided the health system has a piece of each thing, whether it's an HMO or a PPO. If you've got the same care, you should be able to carry it through. So that it should be seamless. So it wouldn't. So payment arrangements might change, but it's essentially all Medicare for all anyway, because the billing should eventually, for dual eligibles, be the same. There shouldn't be a separate Medicare, a separate billing rates for doctors or hospitals. It should be the same, and there should be a requirement that if somebody's not insured, well, they'll be in the public option anyway, because it should also be for people who can't afford it. Medical charities fund should have the same provisions, so people aren't billed these huge prices because they don't have insurance. And because the issue is price. It's not cost, it's price. Corporate healthcare and even public healthcare, if there's such a thing, even Catholic Health Association members, try to drive price down. They're not wasting money. They're not going to spend more just because they have money. They don't have what's called a fixed loss contract, which is how we built the C5A. Lockheed had that kind of contract, so they went everywhere. They went to all the conferences, and they said happiness is a fixed loss contract. We don't have that, and there never will be that in healthcare. So they will cut costs and make greater profit. So, but they will stick the price in there. So let's just remember that when we talk. We don't want to talk about low-cost medicine. We have low-cost medicine. And so, when I was doing proposal management, our watchword was we're competing on price, not cost. And our costs were low, and where I was working for. In some places it wasn't. but the competition was on price. In doing you bid or I bid, all of that, it's price, not cost. Now the problem with the Affordable Care Act is that much of the funding came from capital gains taxes and dividend taxes that fell only on the top third of tax of income. I made a mistake in the comments. 4% of the population pays has 1/3 of AGI, and they pay a bit above half the taxes. The upper middle class starts at 4%. The upper class starts at 1%, which is about $500,000, maybe $400,000. Where the promised cutoff for the rich is. You can't really do that. So, and I'll change this in my testimony, or in my website. I can't change, and I might send amended testimony. But so the rich pay for more than half, or the middle class and the upper middle class, but they that 4% make a third of the AGI. The bottom 80%, 75%, they pay they get another, are paid another third of it of adjusted gross income, and then of course the next 20% are the real middle class. That's the 75th percentile to the 5th percentile, and something like that, 76 to 4. And here's the thing: the members of the majority will not be giving up their political home just because we raise the taxes go up and are made by a broader base. The people who are Democrats because of the overall policy, not because of little pieces of the policy. They're not going to suddenly say, "Oh, I want to be a Republican because my taxes got raised." No. The progressives will stay where they are, and no Republicans are going to say, I'm going to vote for a Democrat because, darn it, I love the fact that Joe Biden didn't raise my taxes since I'm in the middle class. They don't change. It's the greatest myth, or the stupidest myth, that George Bush, was beaten by Bill Clinton because of his tax pledge. No, there's nobody who was going to vote for Bill Clinton who was a Republican because we rationalized the tax rates and hit the upper class a little harder. It just didn't happen. Govern that way, okay? Govern like you need to do the right thing, and let's talk about payroll taxes, which is the other option for Medicare for all or for healthcare reform. They're regressive. They're too regressive. The $400,000 limit is and having them fund, or $200,000 having them fund healthcare reform is the reason that you've had countless votes to repeal Obamacare, not because there was anything wrong with the provisions of Obamacare, but because of the tax part. And a payroll tax would be regressive because it doesn't tax capital at all. You can't tax only capital or half capital, and you can't tax. It actually was only capital, and you can't tax only wages. You have to tax both, and that means a consumption tax. Now there's a couple ways to do that. One way is to, and I talk about this in the attachment on tax reform, and I'm going to link to that because there are videos for that, quite a few videos for that. If you want to give exporters a break, then you want to do a border adjustable tax. So it would be the standard consumption tax, goods and services tax. However, if you want to give employers the chance to have private insurance rather than, but very comprehensive private insurance, to be absent from single payer, so it wouldn't be as single payer, then or it would, if they want to have a little extra, that's what's going to happen anyway. Single payer is not going to stop executive policies or even management level policies, or union policies. But although basic care should be universal. But some employers may want to hire doctors and have no third-party insurance, governmental or private. I know my dad was in Rockwell Collins, and they had doctors. I went to the Rockwell Clinic, and I think it was like $10 to go. And when other people were charging, $50 for an office visit, the pharmacy was free. Corporatist socialism is at its peak. If companies want to do that, that's how you save costs. Because, if they can get a tax credit on an employer goods and subtraction VAT, also known as a net business receipts tax, if they can provide better care and for the same money and pay less taxes, they'll do that. That is the way to keep a private option. Again, paying taxes through employers rather than the IRS stops that market failure. To actually get this passed, the Affordable Care Act surtaxes need to be repealed. The HI tax needs to be repealed, and just do it through one tax, either the subtraction VAT or the goods and services tax. Now, there is the question of what do we do with asset? How do we tax assets, and what should we use them for? It needs to pay back down the debt and pay for military spending overseas. Especially if it's both defending our way of life and defending our trade relationships and our clients, our suppliers, shall we say, our economic colonialism, taxes should not be on end of the year balances. They should be on individual transactions, and the rate would go between 23.8%, which is the same rate as capital gains and dividends and pass-throughs. It can go up to 28.8, or you can meet in the middle. I think if there's enough votes for Build Back Better, eventually it will go to be taxing high incomes. In fact, Build Back Better should be sold as a right to life issue. And get more votes, but maybe they'll get the 28.8. I think 26 is probably a better thing. Just to finish up here, why should rich people want to pay more taxes, especially that top 4%, especially that top 1%? Well, here's the deal: the top 10% of households indirectly hold 56% of debt held in the Federal Reserve, bank assets, and long-term investments, and 77% of mutual fund and debt holdings. Now, according to the Pareto rule, half of that, 38%, 39% of mutual fund and direct bonds, and 56% of long-term, so that's 28%. They're owned by the top 1% of households. They're the ones, if the debt collapses, that will lose those assets. So they need to pay more money with an asset value added tax, because they can be broke. I mean, those bonds, that federal debt leverages capitalism. Capitalism can't really survive without it. So if you're a capitalist, you need to pay more for transactions, and if you do that, then the nation will survive its debt crisis. If not, thank you.